Hi, everyone. Welcome to the Control and Compound December update. Joining me as always, Christina White. Christina, how you doing today?
Hi, Darren. I am doing great. I'm very festive. I've got my Christmas sweater on. I cannot believe that we are in December, but here we are for the December update.
Can't believe it. I'm having a great day too. Let's jump into it, Christina. Lots of new economic news, stock market news, real estate, Bitcoin news. What are we going to start with? Why don't we start with Bank of Canada?
Yep, that's always a hot topic on the update. We'll chat about that again because we do have a announcement coming up. So as we're recording this, we have not gotten that announcement yet. It's going to be coming out on December 6th. And a lot of people are asking, are interest rates going to go up? Are they going to stay the same? Are they going to go down? Many questions. So as usual, let's chat about some of those factors that help them decide and what they're going to do with those interest rates so we can make our own prediction. So as we know, the driving factor here is inflation. That's what they're trying to get in check. Economists are expecting that inflation will be an average of about 3% when the numbers come out next, this month. It's going to be about 3%, 3.1. They were expecting it to be, the bank was expecting it to be about 3.3, and we are lower. So September, when the numbers came out, we were about 3.8, and that's gradually getting lower. So on that side of things, inflation getting lower, you would think, interest rates lower. The economy is also looking weaker than expected. So Stats Canada came out on November 30th with their update. The GDP contracted 1.1%. So we are down. We've got a negative quarter for our GDP. Now, as they did this, they did go back though, and they revised the second quarter. So now they're saying that the second quarter was not negative. It was actually up 1.4. We're really splitting hairs here, eh? Like we're not up that much, but they're now saying that it was up 1.4%. So that actually rules out that big recession word, right? Because by definition, we need 2 consecutive quarters to have that recession, which now that they've revised that second quarter, we do not have. But those are all signs that things are slowing, right? So again, leading towards the interest rates maybe coming down. They've got another report coming out this month on employment, and they are expecting that jobs, the unemployment rate is going to be slightly rising. So another, factor. That all kind of sounds recession-like to me, but nope, they revised it. And they're predicting right now that we need about 6 months. So the bank said that we need to see this for 6 months' time before they're actually going to make any changes. So my thoughts on December 6th is that we're probably going to end up seeing it stay the same. Now, I can't predict the future, so who knows? But if they want 6 months, then we're probably looking at, March, April, so second quarter, when we might see those rates come down. Can't imagine them coming down quickly or dramatically, but what they're thinking is we're going to stay the same for this December 6th announcement, and then we're probably going to see some changes here in second quarter. So the only other factor there that I wanted to touch on was, if we remember what happened last time they made an announcement, they decided not. They kept the rates the way they were, and the Canadian dollar dropped. We went down to 72 cents, right, when they made that announcement. That's because our neighbors over there, they're doing quite well. They've had about a 5% growth over the last quarter. So like they're not experiencing the same, weakening of the economy like we are. So we are up to 74 cents right now. Now I'll tell you, I was just down in the States last week, and that 74 cents is not great. A little rebound didn't help much. But we'll see how that plays out too. So I am, interested to see what the announcement might do to the Canadian dollar.
So I just want to go back to the GDP. So just so I understand this. So the second quarter was a negative growth in GDP, but just before they announced the third quarter, which was also negative growth, which would have meant a recession, they updated the second quarter to say, no, it wasn't a negative growth. It was slightly up at 1 or 1.4%. So technically we're not in a recession. Sounds about
Yes.
right.
Yeah. So, and technically, if we're not in a recession, then what's the need in lowering those interest rates? We got to wait this out another 6 months, right? Which is what economists are predicting.
Oh, cool. Thanks for that. As far as the stock markets go, the Canadian market year to date up 4%, minus 1.4 on a 1 year basis. And again, US outperforming us, US up 9.45% year to date and 12% over a 1 year. So you look at those 1 year returns, US up 12%, Canadian stock market down 1.4%. Huge spread there. But Bitcoin continues to rock and roll. Bitcoin's around $38,000 at time of recording here. That's up 132% year to date. So if you bought Bitcoin last January, you're plus 132%. Now, in fairness, it's still down from the high of 2021 when it hit 65,000. So depending upon when you bought it, but if you bought it January 1st, you're up 132%. Two really cool updates on Bitcoin. The halving date, just when they're going to make it the halving. We talked a whole podcast about that, where it's going to be more difficult to produce Bitcoin. That they're targeting April 17th, 2024. Not targeting, but it's the best case prediction. But the other really interesting thing, so in Canada, you can buy a Bitcoin ETF. In the US, you can't. But Grayscale, a company in the investment company in the States, took the SEC to court about this not allowing Bitcoin ETF, and they won. And the SEC decided not to appeal the ruling. So the speculation is they're about to start allowing ETFs in the States on Bitcoin. And last week, or this week, I think, the SEC met with Grayscale as well as BlackRock to discuss Bitcoin ETFs. So again, the speculation is if a Bitcoin ETF comes out in the States, we've got that 10 times our population, American money, that is going to look at this and say, great, we're all going to want to. So a lot of these people are going to want to play in the Bitcoin market. ETF's an easy way for people to get involved in that. So they expect supply and demand. If more people want to buy something, the price is expected to go up. So that's something to keep an eye out.
Go buy Bitcoin right now. Go buy Bitcoin right now.
I'm not telling anyone to buy anything.
You're making me think though.
But Bitcoin's always like this. Everyone I talk to with Bitcoin, I should have bought more. I should have bought more. I should have bought more last month, last year. But who knows where it's going to be? We're not Bitcoin experts. We're just giving you the numbers. As far as real estate, no surprise here. Real estate, home sales fell 5.6% in October. The number of newly listed properties declined. And, for those of us a little closer to the real estate world, we've got a lot of mortgage broker clients. We've got a lot of real estate agent clients. We're talking to real estate investors every single day. The demand and the craziness of real estate has just kind of gone away. I like the Canadian Real Estate Association president said, it's only November, but Canadians have basically gone into hibernation on the housing market and might be waiting till spring. So we're seeing flat sales, slightly decreasing market prices, but no huge blow-ups in real estate. Just we're not seeing that rapid growth we saw the last couple of years. It's pretty flat. What else we got, Christina?
So on the real estate side of things, I think you kind of covered it. I know that kind of ties in with the those interest rates and those numbers. Definitely not great out there for purchasers. So moving on to industry news. So we've got a couple things on industry news, a couple questions that articles that are floating around out there that we've had questions on that we wanted to talk about today. So I know we wanted to touch on that.
Yeah, there's a couple articles going around about the increased death claims and the decreased mortality. So, we saw a slightly decrease in mortality the last couple of years. Now, there's really two big things on the mortality side that caused that. COVID, 100%, and opioid deaths. So if we look at who's affected by that, well, it tends to be the older people with health problems that died as a result of COVID, okay? And the opioid deaths tend to be young people. Those typically aren't the people that the insurance companies we deal with are insuring on an individual basis, maybe on a group basis, but on an individual basis, they're not really seeing, the 30 to 50 or 30 to 55, where most of the people kind of buy insurance, or 25 to 55. Those aren't the people that have a bunch of other health conditions that COVID will kill them, the older people, and those aren't the people that are doing serious drugs all the time, because they wouldn't qualify for an insurance plan. So mortality rate, no one really thinks mortality long-term is going anything but up. The UN predicts up. Everyone's predicting up. AI is coming out, the technology, the increases in medicine. Can we have a little blip? Sure. As far as claims, yeah, we did see an increase in claims from the insurance companies the last couple of years. Big one again. COVID was a pretty big factor of that. Just keep in mind it was a little blip, but it was a significant or more significant blip for the group insurance people. So if you're covered for group insurance under your employer, you've answered no medical questions. Typically, you've passed no medical. You could have, you could have five health issues, and you're still going to get covered under your group insurance plan. Those people with multiple issues, those are the people that died more often in COVID. On the individual health plan, the stuff we deal with, you're still showing medical evidence. You have to pass a medical, at least medical questions. So yes, we saw a slight increase in that with COVID, but not near as significant as the group side, and not near as significant as mortality overall. So, not really a big concern about that, but we just had a lot of questions about it. So we thought we could have a little chat about it.
Yeah, and I think we could probably get into more detail on it as well. We're thinking of bringing an actuary onto the podcast, maybe at some point, someone that digs in and analyzes these things. So they decide the prices of insurance and these numbers that I can't dig into. Maybe bring an expert in that can tell us more about and dig into it. But we talk about claims, and I did hear some interesting stats. We were at a conference there last week, and they had made a couple of interesting stats. One of them being that they paid $16 billion. The insurance industry paid $16 billion of claims in 2022. And I know, on your side of things, they're talking about how claims going up, is that a bad thing? Well, $16 billion going into the hands of families that just lost a loved one, like that is not a bad thing. That is what we're here for, right? That's what we want. So to hear that and to see that happening and know that the insurance companies are in the business of paying claims. Remember, they set themselves up for this. We talk about it all the time. They set up the reserves for those future death claims. It's what they do. They do the math. The actuaries do the math on it to make sure that money's there, so that $16 billion can be given to those families when the time comes. So I like hearing those stats that those claims are getting paid out. Another cool stat was that the life insurance industry employs close to 170,000 Canadians across Canada. That's a lot of employees, and it's a pretty, we know it's a solid business. It's been around a very long time, longer than Canada. So the fact that they are part of our economy and growing it as well, it's a nice stat to hear. I liked hearing that one as well.
Yeah, the insurance industry is a massive employer in the country, and they're also a massive influencer. They have a lot of because of the size of them. They're the Minister of Finance meets with our industry association every single year. So they, all governments, current government, previous governments have identified how important the insurance industry is to the economy. So, that's why when people go, oh, is the government going to change all the insurance and screw everybody and stuff? It's like, there's again, no fear of that. What else we got? Economic update. I've been waiting for this one, Christina.
Yeah. So this is a new one that we're going to start doing in our monthly updates, chatting about some of the things, other things that we've heard about in the news that we want to chat about. So I know you're ready to chat about a few of these. So where do you want to start, Darren?
Yeah. So the fall economic update, our finance minister came out with that this past month. And I want to talk about three or four things here. So to solve the housing crisis that has been in part caused by government spending, the government has decided to increase government spending to solve the crisis that was created by government spending. So they're going to spend $15 billion on low-income housing, but it's not starting until 2025. So we'll see if the current government's still in place in 2025. But that was their plan for solving the housing crisis. I'd rather them just lower interest rates and stop spending money and lower interest rates, and then the economy would take care of itself. But that's their plan. There's also no plan in the budget to balance the budget in the fall economic update. So right now we have a $40 billion deficit. So that means the Canadian government spent $40 billion more last year than the Canadian government brought in. And when I say brought in, I mean taxpayers contributed. So, okay, that's the deficit. And people always talk about the deficit. That's like your credit card payment going up, okay? Or that's like your expenses being higher than your income every month. The actual debt is now 1.2 trillion. That's up from 600 billion just 8 years ago. So under our current prime minister, this debt has doubled. Okay. And then interest payments in 2020, just going back to 2020, interest expenses on our debt were 20 billion. This year it's going to be 46 billion. So we've massive increase in debt, massive increase in interest charges, massive increase in the deficit. So I guess my question to everyone is, do you think taxes are going down?
Somebody's got to cover the payment.
So it's, do you want to go into business someone that loses money every single year and their debt's doubled in the past 8 year, and their interest payments have more than doubled in the past two? So if you're an RSP holder, you're a business partner with the government, and they're going to decide how much you get based upon the current tax rates at the time you take it out. So again, just something to keep in mind. I don't believe there's any chance taxes are going down anytime soon. They also did mortgage renewals. This was, not a bad effort. They asked the banks to work with mortgage renewals for people that are in financial hardship, to either extend the terms or extend the amortization. Now, this was kind of like a request. The banks have already been doing it to some extent, and it's not enforceable, and it's not a law, and there's no penalty if the banks don't do it. But it makes sense for the banks anyway. So the banks, they don't want people to foreclose. If they can work with them and get them through a rough period, they want to do that anyway. So as much as
Yeah,
we crap.
I was reading an article on that one too, where they were saying that to own, they don't know if people will be owning their homes in the future based on that. Remember when we had that conversation about the infinity mortgage? That's what this kind of is. So they're asking that. The other one on this topic too that kind of got me was they did the same. I know that it sounds positive. They're asking the banks and stuff. They did the same thing with the grocery stores. They spent the money, they created the increases, they created that carbon tax, and now they're going back to the grocery stores and saying, hey, can you fix our problem? And as well to the banks, hey, can you fix the problem we've created? We're not going to take accountability for it, but maybe you can help us and you can help Canadians, right? So another band-aid on the problem.
And then the big one for real estate investors in the fall economic update was the changes to Airbnb. Now, in fairness, it was municipalities across the country that first kind of went after Airbnb in certain centers like Toronto, Vancouver, Halifax, saying you can't do Airbnbs. But people were still a lot of people were still doing it. The federal government came out and said, okay, if you are in a municipality where you're not allowed to Airbnb and you Airbnb, then you're not going to be able to write off your expenses. So to put that in perspective, you've got a condo in Toronto and you bought it as an investment property. You're a mom and pop investor with one or two properties. The only reason you bought that place was because the numbers at Airbnb justified paying that high price. Now the government is saying if you make $120,000 and you had $120,000 of expenses, with your mortgage, interest, expenses, etc., you can't write off those $120,000 of expenses. So in that scenario, if you had $120,000 of revenue and $120,000 of expenses, that would just increase your taxes about $60,000 at the end of the year. You'd pay full tax on that revenue of 120. So they're trying to really eliminate Airbnbs. The Economic Council of Canada came out with a study in October where they said, how big of an impact is Airbnb on the rent increases across the country? So they looked at the markets over 30%, and they determined Airbnb basically had an insignificant effect on rents. Less than 1% of the rent increases were attributed to Airbnb. So that came out in October. That's an independent think tank. Government took that information and said, great, we're going to not allow a tax deduction for Airbnb. So there is one really, so the real losers on this are the small Canadian real estate investors that have 1, 2, 3 properties. The real winners on this are the foreign international billion-dollar hotel chains, because we're already seeing in these major centers hotel rates significantly going up. So it's a real win for the hotel chains. It's a real loss for real estate investors, the small real estate investors in Canada. And there's more news on the economic update, Christina. What did I miss?
Oh, a positive light. A positive
Yay!
spin. Yay. They announced the tax-free savings account contribution limit for next year, and they are increasing from $6,500 to $7,000. So you've got $7,000 in room to be able to grow those investments tax-free. not a bad thing. I'll take the extra, I'll take that $500. Why not?
Absolutely. All right. What about Control and Compound? What's new and exciting with us?
So we've got a couple things on the books for 2024. I'm excited for some events. You're going to be speaking at the Strategic Entrepreneur Networking event with Danielle Chasson on January 23rd. That's going to be at the Oakville Conference and Banquet Center. So there's going to be networking, debates, panels, and then Control and Compound will be there for the keynote speaking. So that's exciting. We should have some links and some emails out with tickets and how you can get signed up for that here shortly. We also have the Real Estate Summit with Ken Dunn coming up in February. So February 15th to 18th, that's going to be out west in Calgary that we're going to be attending. Excited for that. And then another big one was last week, or, depending on when this comes out, but we had a reel that hit 2 million views there. So that's pretty good. It's showing us what you want to hear more about, which is in turn why we added that update section to this the update section to this podcast is kind of talking about more current items and current things and stuff that you guys are relating to. So we're excited to see that. We always like to see feedback from our viewers, whether it's in comments, likes, all of those things, because it gives us an idea of what you want to be listening to. And we heard you, and we're going to make sure that we start talking about those things more.
Great. So social media reels are up big time. Podcast viewerships are up. Thank you for that. What were the podcasts last month, and what do we get coming up this month?
So last month we had Jillian Irving on, and she chatted about those student rentals, which was great. We also had Are the Wealthy Paying Their Fair Share in Taxes? That was a good podcast. I going to be a spoiler alert. I want to say they are, but you got to go back and you got to check that one out. We had Bitcoin Part 3 come out, and we had another podcast from our Nelson Nash series. For next month coming out, we have a podcast with Danielle Chasson to talk more about what she's doing, give us some insights on that event that you're going to be at. We also are going to continue our Bitcoin series, and one that I think is going to be really fun is we're going to share our predictions for 2024 and what we think is just around the corner.
Cool. That's awesome. Well, that's the December update. I can't believe it's December already. So the next, we'll have 4 more podcasts this month, but the next update will be in 2024. Sounds crazy. So Merry Christmas, everyone. Thanks for watching. Thanks for listening.
Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controlandcompound.com, and you can sign up for an education session with one of our wealth coaches.